Hello and welcome back to the Atlantic Council's IMF-World Bank Week programming. I'm Alisha Chhangani, Assistant Director with the Atlantic Council's Geoeconomic Center, and today we are live at IMF headquarters to talk about how to build coordination across global crypto asset regulation. Not an easy question to answer, but I have two experts here who are going to help me tackle this question together. I have Christy Goldsmith-Romero, who's a Senior Fellow with the Geoeconomic Center, also former CFTC Commissioner. I also have Martin Moloney, Deputy Secretary General at the Financial Stability Board. Christy, Martin, thank you so much for joining me today.
Thank you.
Christy, I'm going to start with you.
Okay.
You served as Commissioner at the CFTC and during a period of rapid crypto growth.
Yeah.
Tell me a little bit about the market landscape and how it's changed.
So I think, I served for 3 years regulating the trading of some crypto, Bitcoin futures and Ether futures. And the biggest change I saw over those 3 years was the institutional interest getting business, really wanting to get into this business. They had this client demand. So I think, though, what we saw was there was some uncertainty and they wanted to make sure that, crypto was stable. And then, of course, there was regulatory acceptance. And so with the CFTC, there was regulatory acceptance. We expanded and brought into the regulatory sphere a number of different crypto exchanges and clearinghouses and brokers and things like that. And so that really helped. And then, of course, we're seeing an explosion of interest now. I mean, if you think about institutional interests with stablecoins, which always was there, but they were waiting for Congress to act. I mean, the Genius Act has just spurred all this excitement. And then I think the Congress and the current administration being behind getting more legislation, more regulation in the crypto space has just made what we've seen, like Bitcoin, rise to a record level. There's also this really interesting thing going on with Bitcoin right now, which is some are seeing it as a safe haven asset, which is super interesting, like gold. And so they're calling it digital gold. It's not really borne out to be a true inflationary hedge, but to see it rise to a record level during the government shutdown was really interesting.
Yeah.
So I think that is combined with the excitement just surrounding what is Congress going to do in terms of the market structure litigation.
Yeah. So Martin, the excitement is not only domestically in the US. There's a lot of excitement happening internationally. The FSB just released a new report looking at crypto activity, stablecoin activity happening. Can you tell me a little bit of the key takeaways you found from the report and how are countries doing when they're adapting the recommendations that you have? So
we did a report that covers 28 countries, if you count all the European Union as separate countries, or I guess we could debate that. But IOSCO did a parallel report that covered 20 countries. There's a bit of an overlap between the two sets, so between us we covered 40 countries. And the picture is incredibly interesting. It's very complicated, but it's really interesting. There's a huge amount of ambition. There's a lot of countries. There's probably only about 11 countries that have really well-developed, comprehensive crypto regimes. And there's only about 5 countries that have really well-developed stablecoin regimes. But there's a huge number of countries that are in the course of developing their regimes at the moment. That's the good news. I think it's been obvious for a few years that the next big thing in crypto was going to be regulation, and that was going to give a huge boost to crypto when it came along. It's happening right now all across the world, and that's a good thing. It moves crypto into a completely new space, creates all sorts of opportunities for it, but the regulation is proving to be difficult in 2 different ways. One, a lot of things are being left out that should be in there. Okay. And 2, there's a lot of differences in the way countries are doing it. Now, we've always had differences in the ways countries did traditional financial services regulation, but that tended to follow the practices in that jurisdiction or in that region, the way the financial sector evolved. Crypto's different. Crypto's a global financial phenomenon. It almost doesn't have a home. But countries are treating it as if it did, and they are developing financial services regulation in ways that, in effect, mostly mirror the way they've traditionally done financial services regulation. Some of the early adopters did a little bit differently, and they tried to create new bespoke regimes. But a lot of the other countries are saying, well, how do we regulate financial services? Okay, let's do it like that. And that it means we are recreating in the crypto space the kind of fragmentation that you see in financial services all around the world. And that is going to prove to be a challenge if crypto is going to stay as a global phenomenon, which is one of its main benefits.
It's a really great way that you put it there. Christy, you already mentioned the Genius Act, so I'm going to tease that out a little bit. So we had stablecoin regulation here in the US. We have a lot of excitement for market infrastructure, a lot happening with consumer protection, AML-CFT rules around crypto. What do you think is still the biggest gap in US crypto legislation and that needs to be advanced?
Yeah, the biggest gap in the United States is that there's no regulator for Bitcoin. I mean, this is like a more than $2 trillion market, and I think most people think there's a regulator. They think, oh, it's either the SEC or it's just the CFTC, where I worked at both of those places. But it's not a securities, and it's not a security, and a court has held that it's a commodity. So the CFTC does not have oversight over it to supervise the trading in it. The CFTC could only supervise and have jurisdiction over Bitcoin futures, not what we call spot Bitcoin. So I think this is the really hard part, is addressing this gap, and Congress has been working on this for about 3 years. This is called the market structure legislation, and I think the struggle really comes down to what you just said, Martin. Like, are they going to just follow what has traditionally been done, or try to break new ground and think of this in a very innovative way? I mean, one of the ways to think about this is technology neutral, which is to sort of look at the activity and say, if you're going to be an exchange, you should have kind of similar requirements on an exchange, same with the clearinghouse. And then you sort of have to look, is there something that's a technological limitation or a technological benefit that regulators should be thinking about capturing? And that's what makes it so hard to think about in the legislation. But that's where they need to go. I think that should be the crux of any next legislation that we see come out of Congress.
Okay, so Martin, from the international perspective, I'm jumping back to you on this one. What does good coordination look like when it comes to crypto asset regulation? Where should jurisdictions kind of find common standards? And are there places where it's okay to diverge on certain rules?
I think in a way the key point, let me talk about some of the obvious difficulties that arise. So let's take stablecoin. It's the obvious one for a debate at the moment that's going on around what's called multi-jurisdictional stablecoins. We've had stablecoins that roam the world freely up until now. Once you start to regulate them, then the question arises, well, am I regulating it the same way as you're regulating it? And if it's available in both countries, or if two different connected tokens, fungible tokens, are available in both countries, what happens if stress happens?
Right.
How do people interact with that? So let's say you get a run in one jurisdiction and the reserves run out. What happens? Did that reserve get improved by the reserves held in the other jurisdiction? There's a difficulty here. It's not an impossible difficulty to manage. It's just nobody sat down and thought about it and worked it out. How do we make it robust? And you see lots of differences around the world. I'll stick with stablecoins for a second. If you look at the difference, for example, between the United States and Europe in relation to how they look at the kind of assets they consider as appropriate for backing a fiat stablecoin. That's an absolutely critical question. But the US measures it one way and the EU measures it another way. Is either of them right? Probably neither of them is wrong. But the issue is not that one is better and one is worse. The problem is just that they're different.
Yeah.
And what is that difference going to do to how the entity that is issuing stablecoins in both jurisdictions manages its reserves? What looked like a really simple, straightforward provision in one jurisdiction suddenly becomes complicated if you make it slightly different and create it in two different jurisdictions. You get opportunities for regulatory arbitrage, for things to be moved about, for clever people to make things look like they're not. That itself becomes the problem. And then at the practical supervisory level, there are ways that we've done traditional financial services that supervisors have cooperated for decades, supervisory colleges and others. Is that going to be enough? And if it's not enough, do we need a much higher level of cooperation across borders for these instruments than we've had before to allow them to continue to be global in nature? And if we make the regulations and the law the same as we've done in the past with the same kind of confidentiality provisions, are we putting up barriers to that kind of cooperation?
So a debate that I've been hearing a lot in DC, especially during the annual meetings this week, is the difference between regulatory harmonization and regulatory interoperability. Can you talk a little bit about kind of where the differences are?
So I don't think we've worked out a good model
Yeah.
in this. And what we're saying in the FSB is jurisdictions need to stop, they need to pause, they need to think a bit about this, and they need to re-look at what their proposals were just in order to try to tackle this issue. And there are a number of ways you can do this. You know, the most, what would I say, isolated way of doing it is you just create your framework, and then you go and you ask, well, who's equivalent to me? If you're equivalent to me, then I will test you and see if you're equivalent, and I'll let you be a source for crypto coming into my jurisdictions. Somewhat more complicated way is you allow some differences. And then you say, well, it's more or less equivalent, but we're going to have to cooperate and engage and discuss and debate to see if those differences are being manipulated or, you know, are creating flaws in the system. You can do it either way. You just have to figure out which way you're going to do it. And the challenge I have is, frankly, a lot of the people we talk to are just not thinking enough about this question, which is a little bit strange when we're dealing with what is an inherently global product.
So we couldn't last 30 seconds in this conversation without mentioning stablecoins.
Yeah.
So I think it's only right that we hone in on stablecoins now. Christy, from your perspective, and then Martin, I'll turn to you on this one. Do you anticipate any sort of restructuring in the stablecoin sector with these growing regulations coming out and the landscape changing?
Yeah, I think so. I mean, I think first of all, there's the need for this infrastructure, right? We are talking about what should be global payment stablecoins. And so there's this need for a global infrastructure that is interoperable, that can work out these differences between borders and what the regulation requires. So one of the things that I was excited to participate in today was the Atlantic Council held a roundtable with the CEO of SWIFT. And as you know, many of you know, SWIFT just recently announced that they're taking their infrastructure and they're innovating with the blockchain. So really exciting to see where that could go, and the focus should be on interoperability, which becomes important so we don't have all these different lanes that then have to cross. So I think that's the first thing. The second thing is I do think we are going to have a bifurcation in the stablecoin industry, because the Genius Act does have these requirements, these reserve requirements or anti-money laundering requirements that are required to be met so that you could be called a payment stablecoin under the Genius Act. So I think what's going to happen is you're going to have one part of the market be a payment stablecoin under the Genius Act, and then a second part of the market being called something else. And the interesting question will be, what does the market do with that? And how is that going to play out globally and with institutions? I think a lot of regulated institutions will probably stick to those that are go under the Genius Act and have those reserve requirements and other requirements. But then there are a lot of others who might be interested in using this other type of stablecoin, maybe from where they are in the world. So I think those are the two areas, the infrastructure and then the bifurcation in the actual products.
Super interesting. Martin, any response to that?
Well, I agree with that analysis. That is undoubtedly the way things are going to go. I guess from my point of view, my guess is that the regulated space is going to overwhelm the unregulated space, just because of the consequences for, I think, for banks and others who are going to get into this. When you want to get into this space as a regulated financial entity, you only want to deal with regulated financial products and entities. And equally, if you're a newly regulated crypto service provider, you suddenly realize you have a dialogue and a relationship with the regulator, and suddenly you have to do differentiated risk analysis on regulated versus non-regulated products you deal with. And all the weight starts to move in that direction. I could be wrong, but my guess is the regulated space is really going to take over, and this is going to be a transformative moment. I mean, we had a couple of jurisdictions who didn't participate in our process when we looked around the world. And my guess is those jurisdictions are thinking they're still going to be able to service an unregulated crypto community. I doubt it. I think that is going to shrink. It's not going to die, but it's going to shrink, and it's not going to be nearly as successful as the regulated one. I think crypto's been waiting for this for years, for this moment to become regulated. It's just the ideology and the culture just wasn't quite ready to recognize the point that they'd reached. I remember talking with this back in 22, and it was obvious then that this is where we were going.
Yeah. But you know what? One of the things is that we do want a race to the top, not a race to the bottom. So I'm certainly a fan of, having stronger reserve requirements,
Yeah.
having protections for national security against illicit finance, and basically the things that make a stablecoin stable. It's in the name, having kind of audit requirements, and so ultimately, we want the race to the top. We want it to be more regulated. I'm a fan of that. And while I know there'll be some part of the market that will stay in this other type of coin, I mean, I do think that I would like it to go more in the regulated area.
I think it'll get there. The one really unknown for me is a lot of people are talking about stablecoins developing new functions and new roles that they don't have at the moment. I frankly find that quite hard to assess, and I don't see much evidence of it in the data. So it's one thing to have a kind of a hype cycle where people are talking up their product, and good luck to them.
Yeah.
But it's another thing to actually see in the data that its actual function is changing.
Yeah.
And that hasn't happened. And if it does happen, I think that will be part of the answer to your question. The structure could be quite different if the functions change.
So Martin, I'm glad you brought up data, because a question that we get a lot here at the center is, do we have real-time visibility into a lot of the activity that's happening at crypto markets? And I'm sure that really impacts how we manage risk with the markets and things like that too. So do we have that real-time data? Christy, maybe from the US perspective?
Yeah, so I can speak from a US regulatory perspective. We had quite a lot of insight. I mean, that's how we're able to bring the enforcement actions that we brought. We were able to see who was trading with U.S. customers who should not have been, who were not regulated. I mean, there are these great kind of blockchain intelligence companies that are out there, and one of the really cool things that they do is they're taking these wallets and they're sort of trying to match them out, map it out with identities or at least known associations. So you sort of get like a Google Maps, but it's not just the street addresses. You can see the different buildings in their wallets with, a name associated. Really interesting to see if there's a crypto hack to see where the money moves, where the coins are moving in that way. I am really interested in TRM Labs, who was one of these blockchain intelligence companies. They just created this thing called the Beacon Project.
Yes.
And this is like a public-private partnership where they're going to work with the government to help kind of identify risk and send up red flags. So I'm very excited about that. I'm also really excited about where AI is going in this. I've been a big proponent of using the government in this function for market surveillance, using AI to be able to sort of send up these red flag kind of triggers immediately, so that then the regulator can take a look at them and dig deeper and decide. But I think we're talking about visibility into technology in markets, and so we have to use technology to get there.
I like the way you put that.
Yeah.
And then from an international perspective, Martin, what's the data look like from your end?
So the data that we're getting, I think, is it's not great. And the regulatory reporting requirements that are going into the different regulations around the world, equally, I would say they're one of the weak spots that we've identified, that it's not really been well thought through. It does feel a bit frustrating because we're talking about a product and an activity that naturally generates data, and the data is just there to be picked up. We do need to do a bit of thinking about how regulators get this data and stop trying to make it look like traditional data reporting, and maybe make it more aligned with the potential of the technology. I see a lot of people coming talk to me about products in the distributed ledger space that would be really helpful if they were taken up and promoted in terms of creating transparency. I suspect there's still a cultural issue that people believe that transparency won't be good for the sector, but on the contrary, I think actually it's one of the things that would boost this sector quite significantly if we just embraced that transparency that's inherent in the technology. Many years ago, a policeman said to me that Bitcoin was unique because it was like somebody walking through snow. They left a trail. And they left a clear trail. All you had to do was go and look for it. And it just was totally unlike fiat cash. You know, it's there to be looked at if you simply invest in the resources to go look at. There's lots of technologies out there around ensuring that key data travels with the transaction, and technologies around registering wallets and so on. If we just grasp it and use it, it will create a very safe and transparent and effective part of the financial system.
Can I
Yes,
respond to that? So
Yeah.
I love the way you said that, and I like that with the footprint. I think one of the things that I've been talking about for the last couple of years is this idea with digital assets of moving away from the concept of anonymity and moving more to financial privacy. Because the traditional financial sector has been so used to financial privacy and providing that. And so to the extent that we can move away from this idea of anonymity, at least for those who want to come into the regulated space, and move more to the concept of financial privacy, that allows for regulators and the companies themselves to be able to do the due diligence that they need on who has the wallets and who's doing the transactions. I think that's the way to go, and I think that's the future as more of this is being restructured into the regulated space.
I'm really glad that you brought that up. I think that's a great distinction, especially in the rhetoric that we're having right now. I'm going to turn to the G20. The U.S. is taking on the G20 presidency next year. Chair of the FSB, Andrew Bailey, met with G20 finance ministers earlier this week talking about the financial stability concerns with stablecoins. We're not close to our 2027 targets that we had set up. How do you think, Martin, the U.S. should chair the G20 to making sure that we reach those targets for payments, but also start setting standards for crypto asset regulations?
So just on the cross-border payments targets for a second, I've said recently, and it's at the Cybos conference, I don't think we'll reach those targets. And that is a regrettable fact, but it's a fact, and we all have to acknowledge it and think through why that is the case. There are two alternative sets of explanations. One is the industry just hasn't had enough time to implement the changes in policy frameworks that we have now more or less completed and put in place. That'd be fair enough. That would mean you need to give it more time, and you need to work with them to get that done. And it's interesting you hear Swift and others making that kind of announcement that you talked about earlier, because that's a really interesting proposal. And if we could get a sense of what the take-up of that is going to be, what the timeline to serious global impacts on volumes of transactions, then that would be extremely encouraging. On the other hand, you could say, we've done all this policy work, but in fact, that wasn't the problem in the first place, that we all assumed that there were regulatory and technical impediments to better global cross-border payments. It could be the case that there were other reasons and that the incentives just aren't there. In that case, you have to start thinking about leaning in even more, I think, to new technology and really encouraging and pushing it, because people will often point out to you that stablecoin can be used for cross-border transactions that happen in an instant and at very low cost. Mm-hmm. There is a response that has to be made to that, which is, yes, you can, but you can't deal with what are called the last mile issues, which is out there on the ground in countries around the world where small businesses go in and either initiate or are trying to receive the money from a transaction, equally people making remittances and so on. Yes. Stablecoin doesn't fix that. That's the distributional question. And that is going to remain a really big question in cross-border payments. So I think we're going to have a really big, important debate in 2027. The US, I'm glad to say, is really committed to the cross-border payments roadmap. So I suspect that between now and 2027, we will do a lot of work on trying to promote implementation and try to get improvements. And Swift will be one of the people we'll be talking to about that. So let's see how that goes. And in 2027, I think that we need to make sure the debate is honest.
Yep.
We need to make sure that people are willing to admit where we haven't done enough or have done things wrong. That will be really important. I think we have tried to set the tone for that by saying now that we think those targets will not be met. But they're really important KPIs. As long as we're not getting low cost, high speed, transparent transactions for not only the wholesale, but for the retail sector and for the remittances sector, we haven't got ourselves a fit for use global cross-border payment system.
It's a perfect way to put it, Martin. Thank you so much. Christy, a lot of the talk and the excitement for crypto has been focused domestically in the U.S. Mm-hmm. Now the U.S. is going to chair the G20, ideally an international coordination mechanism. How do you imagine the U.S. balancing that? The domestic innovation, the domestic ambitions with the international coordination when there are calls for standards and setting those rules up?
Yeah, well, I would say, first of all, we're not new to it as a nation. I mean, this isn't the first time I'm meeting Martin. You know, with the CFTC and others, Treasury and the SEC as well, we have been involved in multilateral coordination and discussions over digital assets, over payments, stablecoin, all of this for several years, as we were all coming to the realization that this is all global, and realizing that it would be a real challenge if it was fragmented, and realizing that these are really kind of borderless types of products. And so that's something we've been working on for quite a while. I think that will continue. I'm hearing the commitment from those who are in office now. I do think that if we look at something like SEC Chairman Paul Atkins wants to do what he calls super apps, and if we think about super apps, which could be very convenient to the customer to have everything, all their transactions on one app, I think about the global coordination that will take. And it's not a reason not to do it. It's a reason to try to figure out, how do we do that in a way, how do we move forward and get comfortable with that? One of the things we have to balance as we think about regulation in this space is consumer choice.
Yes.
And consumer choice and investor choice, that is going to drive what ultimately gets picked up in the market and gets a lot of use and goes into this use case. And so we do have to listen to those to say, I don't want to have all these different apps. And I don't know if a super app could work truly on a global scale, but I'm interested in at least the conversation. And I'm interested to say, how would it work? Because how do you ultimately take an app and make sure that there are the correct regulatory requirements to that represent the different nations that are involved? And it may be just a matter of a limitation of which countries, customers or investors the app could reach, and that may be one way to do it. It's already going to be complicated enough because what the chairman is talking about is crossing regulators, which it's an interesting prospect in on its own. But then when we cross internationally, I think it raises a different challenge. The other area that I think is going to be a real challenge is DeFi. It's decentralized finance. Right. And this is one that I think is going to be longer and harder to really grapple with. What is the best way to approach this and to talk about it in terms of global coordination and balancing out, right? Every nation wants to be the leader. It was some of this technology. And when I was at the CFTC, I sponsored our technology advisory committee, and we did a report on DeFi. And the interesting thing about DeFi is it is not one thing. It is many different things, many different types of companies and setups and products. And there's also there's very much a sliding scale of what is decentralized. Like we would say, you know, in my technology advisory committee, we would say, how D is the FI? You know, how decentralized is it? How D is the FI? Yeah. And it continues to evolve. So I think that is going to be a really tough nut to crack in terms of like how the U.S. Congress is looking at decentralized finance, how other nations are looking at decentralized finance, and how we're going to address this. I will say DeFi is the area that has had the most illicit finance in it, in digital assets. And so it does need to be dealt with in a way that makes sense so that we have a safe and secure regulatory system and financial system that has the customer protections but also has the national security protections as well.
There's definitely a proportionality between how ambitious you are for global reach and how ambitious you are forced to be in terms of cooperation. You can't say, I think, we're going to do cooperation in the old way, but we want to do something completely new in terms of the global integration of the product and the activity. If you want that, you have to be willing to change this. And that means jurisdictions have to think about how they exercise their sovereignty and how they engage with others, not necessarily to share their sovereignty, but in order to liaise and cooperate and get the right result and create assurance. Because every jurisdiction wants to be assured that about finality, about transparency, about about the fair treatment of consumers, and we want to be assured about financial stability. So we don't want things being built that are going to fall over. The interesting thing on DeFi that you mentioned, I think, every time regulators have looked at this, and I've been involved in a number of processes at a global level, where regulators have not been anti-crypto or anti-stablecoin or anti-anything. They've always asked themselves, let's assume this is going to be a hugely successful product. How do you create a regulatory architecture that allows it to become that and that ensures that it's still safe as it gets bigger and bigger? That's the way regulators have looked at this, although some people will tell us that regulators have been against it. It's not in the evidence. That's not what they've actually tried to do. But when they've looked at DeFi again and again, I think they have drawn the conclusion, this is not as decentralized as you're saying it is. There is somebody in charge, often with different names, but somebody significantly in charge with preferential access to information and control of systems in ways that you've just got to recognize that if you're going to regulate that properly. You can't just fall for the story that, oh, it just runs itself. It doesn't.
They're all so different. So
Yeah.
I think it's really a matter of trying to think of DeFi not as one thing, and to really think about the different types of DeFi in the industry and how those should be approached.
Okay. I want to end on a note of optimism.
Okay.
Let's pretend the three of us are here, back at the annual meetings, not here, in Thailand. What's one measurable commitment you want to see by the next annual meetings in the global crypto asset regulation space?
I'd like to see a U.S. regulator for Bitcoin.
Great answer, Christy. Martin?
I would like to see the various major jurisdictions having resolved the issue I talked about earlier, which is multi-jurisdictional stablecoins. If we resolve that issue, we allow them to realize their potential. If we force them into jurisdictional cages, that's not a good outcome.
Martin, Christy, what a fantastic discussion we had today. Thank you both for engaging with me. Thank you so much. Thank you all for tuning in to this discussion. Next up, my colleague Josh Lipsy is going to be with Brad Setzer, tackling the Chinese economy. Thank you so much.
All right.